Good afternoon, everyone. This is Christy from Ahn Co. It's Friday, March 2nd. I'm going to go over trade for the day and week for you. So big day and big week into these grain markets. A lot of fun movement, a lot of fun buying. You started off the week with more of a fundamental story as far as weather in Argentina for the bean market, and then also just some not so ideal conditions for both winter wheat into the drought areas, and then also a lot of rain happening for the soft red wheat as well. And so that's where you started off with that support, and then it really looked like just funds took over from there. You started off the overnight trade here a lot higher and then fizzled, which isn't surprising when you had such a big week that you saw some profit taking coming into the week. Corn market down a penny on the day, overall up 11 cents on the week. One thing to note is that July 18 got to a price level that we never even saw in July 19 for that crop year. So July 17 crop last year never got to $3.95. The highest we got was $3.94 and a half. If you look back on further into 2016, it did get there with that large carry, but overall into your actual marketing year, you did not see that. So July 18 here this year, we did come up and see $3.94 and 3/4. So you actually have a higher trade here. And that's one thing to note, is that you've seen a lot of buying start to come back up. It's rumored that you had managed money buy over 300,000 contracts of corn over the last month and a half, and you're starting to see that support shine through. Bean market up 24 and a half cents overall in the week, up 3 cents today, so started to fizzle. Overnight trade was up 11 to 14 cents, and then you were actually down a couple cents throughout the day, but able to come back and post just moderately higher here at the end of the day. And then wheat market's biggest movers here this week, especially for Chicago and Kansas City. Chicago wheat up almost 40 cents this week. Kansas City wheat up 53 cents this week. So a lot of movement there that has to do with the not so ideal conditions. Minneapolis wheat was not really along for the ride as much, up 5 3/4 on the week. And what's going on there is you're building moisture into the Dakotas. You're also not having a growing season for them right now. And they were not as short Minneapolis wheat as you saw here into Chicago and Kansas City. You had a very harsh day though as far as it goes for wheat today, so you did take away some of that profit. Down 15 and a half on Chicago, down 14 and a half on Minneapolis, down 9 3/4 here into Kansas City wheat. Meal market, something we don't touch on a ton, but one thing we do want to touch on is up 14.7 here this week. That has to do with the fact that Argentina is a big meal exporter, and so that's been the driving force here with soybeans. Over to the meat markets, a lot of pressure there overall in the week. Cash trade really didn't change all that much from last week. 126 to 130 scattered cash trade, and then 205 dress, which is equal to last week, but you are seeing a lot of liquidation there. It's almost like funds are pulling from cattle markets, hog markets, outside markets, and investing into the grain market. So what you saw, live cattle down just over $5 here this week. That is a switch from Feb to April contract. Feeder cattle down over $2 this week. Lean hogs down over $5 this week. So a lot of pressure into those markets. Outside markets, crude market down 220 on the week. US dollar slightly higher on the week. Dow market down over 800 points. A lot of that coming the last 2 days with a tariff talk on steel imports and aluminum imports, and what that could do for some retaliation as far as trade issues go, especially with NAFTA, maybe with China, and that's been the talk there. I do have to close with the disclaimer: trading in futures and options involves risk loss, may not be suitable for all producers. Have a great day.